Hello Wolfpack, I've got a few things I want to talk about today, but mainly I'm looking at the hourly chart, and that's a bit of a switch up for me, because I don't usually look at the hourly chart, but I've also got the weekly chart and daily going on here, and the weekly is pretty interesting as well, but just a few brief little topics I want to pick up today, and the main thing being that Bitcoin currently is facing a short-term rectangle resistance box or resistance block on the hourly chart. Now, if I bring up the daily chart, you can see it right here. It's that red resistance rectangle there. That we're kind of facing that's the rectangle between around 39.5k and around 40k. So I highly recommend you guys pull up your charts right now and chuck that box in, because if we extend that backwards, we can see that's actually kind of, quite prominent. I mean, even back here when it was initially a support, it was holding, and then resistance here. And all this resistance, it's pretty prominent that we're seeing rejections off this box. And when we do get above it, it does act as support briefly. Even on this occurrence where we wicked above it, we still close below it. So that's pretty important there, so 39.5k to 40k. Now, what we're actually looking for here is an hourly candle close above 40k, and that would basically confirm a flip of the kind of this box here, and then we can turn that green. But at this point, it's still acting as pretty strong resistance. And what I would say is that according to the hourly chart here, and according to the daily chart as well, which I've looked at briefly before, the clear scenarios are this. If we break this rectangular box and we close above 40k, we're probably going to see a retest of 42.5k, from which we'll probably reject, and we'll look at that in a second. And if we break below this dotted yellow line and close below that dotted yellow line, we're probably going to see a retest of this lower yellow line, which is at 35k. So let me say that again. Break 40k, we go to 42.5k. Break around 37.7k, we go to 35k. Very straightforward. Now, if I was to show you the daily chart, you'd probably think it looks pretty bullish, and I kind of agree with you, right? It doesn't look too bad. We see kind of ascending volume in this upwards trend. We're seeing a symmetrical triangle formation on the RSI, which we've just seen a retest at the bottom. And so naturally, once you see a retest at the bottom of something, as you can see here, you're most likely going to see a retest of the top of that thing after. We're coming in for a swooping bullish MACD cross here. A few more green candles to the upside, close above 40k, and we could see that, for sure, bullish MACD cross kind of pending there. And we've recently also seen a bounce off support, which is kind of lining up with the RSI bounce off the symmetrical triangle. And so you would be inclined to, or it wouldn't be ridiculous to believe at least, that this isn't a bearish structure, right? This is no doubt a slightly bullish TA, and it does suggest that we swing upwards to the top of the yellow kind of ascending wedge formation here. However, I would argue there's enough resistance at 42.5k coming in from those three lines that I'll look at in a second, and also the bull market support band. Now, these three lines are coming up from basically critical major support resistance lines that have rejected the price all on multiple occasions. You could look at those separately and pause the video if you want, but ultimately I think there's enough resistance at 42.5k to reject us from that region. And so I think we're kind of pushing for scraps here on Bitcoin, because I think the highest we'll go is 42.5k. And even if we go to 45.5k, we've still got resistance from the top of the wedge, which is a bearish structure in itself. And then we've got resistance from 45.5k itself, which is a pretty bearish support line. I mean, it's going to be hard to break at least. And so I would say, and also given the fact that interest rates are coming out in 36 to 24 hours, I would say that, this is probably not a good time to be entering the market based off that alone, but also in incorporating the bullish argument, which doesn't look too bad for the short term. I think it's going to get rejected, and I don't think it's going to look good within the next day or 2 days. And then we have to kind of flip back to the weekly chart here, because we've seen a weekly candle close yesterday. And this weekly candle close was not good. I mean, just like the last one. I mean, technically, right, this green candle here, or this white one on my chart, was a bullish hammer formation, an inverted bullish hammer formation, which is technically a bullish pattern. But given the fact we rejected straight off 45.5k on that candle and came all the way back down in one candle, I would say that's actually more bearish than bullish. And then following that, we saw a long wick to the upside and a red candle, and now this one's only day in, so it doesn't really matter. So we've seen two very, very, very high wicking candles that closed very low. What does that suggest? It suggests that the candles go up very fast, they find a lot of resistance, and they come all the way back down and close where they started, which means it's pretty bearish, right? You don't really see that when you're about to bounce. I mean, for example, in July, right, when people were extra bullish in the market, including myself, what you saw was the opposite. You saw long wicks to the downside, and what this did was, like, the price went all the way down, realized there was a lot of support, and then it came all the way back up and closed where it started, right? So seeing that to the opposite direction is undoubtedly bearish. Now, as for the weekly MACD, we are coming in for a bullish MACD cross, but it's debatable as to whether we will actually see a green candle that will trigger that. What we saw in 2018, for example, is a great example of what I think will happen now. Now, we came in for a bullish MACD cross in 2018. It looked exactly like it did right now, and then all of a sudden, the price action just flattened out, and the MACD flattened out for a long period of time. I mean, it flattened out from around July all the way through to November. So, 5 months or 4 months of flattening out on the MACD, nothing really happening there, and then we crashed, and then it kind of went all the way down, and then we finally saw a bullish MACD cross after the bear market bottom, and we started gaining again. That's what I would expect to happen here. Now, I don't think we're going to see this bullish MACD cross. I think we'll come close to it, and they'll both flatten out like in 2018, and then eventually we're just going to crash, and then we'll see the bullish MACD cross down here somewhere, right? So, I don't think we're going to see a bullish MACD cross on the weekly. If we did see that, that would probably be pretty bullish, and we'd have to kind of consider a bullish argument at that point, but it seems unlikely to me unless this candle can close all the way at like 45k, which I seriously don't think it's going to do, given the fact that interest rates are releasing this week. Yeah, I don't think it's going to happen, but I guess to summarize the video, it's just going back to that first thing I said. Now, yeah, I mean, the daily chart looks good, and generally speaking, we look kind of bullish, and I would kind of lean towards the bullish argument, but it still stands at this fact, and it stands at the fact that I'm not getting in the market because there's way too much macro tension going on. The weekly chart looks pretty bad. The daily chart has a lot of resistance, but it stands at this just point blank. If we break 40k, we're probably going to go to 42.5k, and if we break below 37.7k, we're probably going to go to 35k. Anything more than that would be blind speculation heading into one of the biggest macro events in the last couple of years, to be honest, and one of the most tense times in traditional markets, in the crypto market as a whole. I mean, as released in my video yesterday, I highly recommend you check out my video yesterday. It's very, very important if you need to understand interest rates and what they do. This could very well send the economy, global economy, into a recession, and financial markets could enter a bear market here. Traditional markets could enter a bear market that we've never really seen before when Bitcoin was around. Remember, Bitcoin's only been around for a bull market in traditional markets. We don't know what a bear market would do. And so it's a very tense time, the next 24 to 36 hours, but also the next year, because those rate hikes are going to be consistently coming within the next year. And the effects are long-term, they're not short-term. So, if Bitcoin's pumping into a rate hike, doesn't really mean much because it's the long-term strength that's been kind of altered, not the short-term strength. So be cautious here for sure. I sound like a broken record. I've said it every video for like a week now, but please be cautious. This is not a time to be kind of entering long positions. It's actually a very idiotic time to be entering long positions. Just to clarify, Bitcoin is about to face something it's never faced before. No one knows how it's going to react. It's as simple as that. And so trading in this time, either short or long, is kind of ridiculous. You need to be waiting and see what's going to happen. But I was just showing you the short-term picture and showing you the main resistance right now is 39.5k to 40k, and the main support is 37.7k. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video. Cheers.